much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the tech rebound following the sector's worst week in more than 7 months. We'll debate the road ahead for that group and, of course, the markets at large with the investment committee. Joining me for the hour today, right here at Post 9, Josh Brown, Joe Terranova, and Steve Weiss. Take a look at the markets. We are sharply higher. It is the NASDAQ that is a ripper today, up 2 1/3%. We're good for 500 points. Coming off the worst week, as we said, for that group since April. Bitcoin had a rough week. Risk came out of the market, as you know. I think the big question we all want to know, where does this leave us now? Thanksgiving approaches. Not that much time left to go in the year. I go back to what Tony Pasquarello of Goldman Sachs said last Friday pre-open. He surveyed the landscape. He looked at the volatility and said it had some elements of capitulation. But he hasn't changed his overall bullish view. Quote, it's a bull market and the primary trend remains intact, the primary uptrend. Quote, I'm a believer that liquidity is set to improve. The economy should accelerate. The story may not be as pristine as it was, but that interplay is still pretty favorable. Does that match with how you think, Josh, about where we are?
I think it's a good take. I think the number one thing that you had to get right this year was that you could have rotation within the Mag 7 and that would be enough from an index level to continue to propel us higher. And then the number two thing that you had to get right was that momentum would remain the most powerful of all the factors. And just look year to date, momentum statistically is number one, up 21% on the year. Growth is up 17, quality up 9.6, value up 9.5, shareholder yield up 9.5. If you had an overweight toward multiple of those factors or any one in particular, you've had a great year. Hasn't been necessarily in a straight line, but overall, that's what kept you on the right side of the market. Low vol is the worst performer of that group. Shareholder yield is the worst performer of that group. So, you do have a lot of dispersion. And I think within that Mag 7 rotation, the most interesting thing to say is it's been very difficult to not be in that trade, even if at any given time, one or two of those names have been giving you trouble. There was a moment this year, Judge, where Tesla was just like a complete disaster. Apple had a moment where everyone was giving up on it. Amazon has had some really bad post-earnings reactions. Obviously, the saga with Alphabet has just been incredible, which I know we'll get to in a second. But giving up on any one of those names and then utilizing it as a reason to get out of the Mag 7 has been disastrous for people, because that rotation from one to the next, it's been really powerful, and it's kept this market moving up.
Weiss, we shook some things out undeniably last week, okay?
Yep.
But back to what Pasquarello's saying. Do you agree? Are we still, A, intact? And even though we're not as pristine as we once were, that I'm using words that he used in his note, we're still pretty favorable. And if you look at the overall backdrop, you've got obviously the CapEx spend. You have a pretty good economy, which is going to, many think accelerate into next year. And you got the Fed, which is going to be more engaged, obviously, on the cutting cycle. What do you think?
Yeah, no, I think we are intact. I can't tell what the market's going to do depending upon what the Fed does. That's a short-term consideration. Overall, we do see the economy strengthening in some parts. Let's keep in mind we still can see the consumer weakening.
Yeah.
So it's a two-part economy. Now, you've got the largest spending that continues to be intact and driving the economy. So I think we're good. And I also think, and this is a term I really dislike, I think it's healthy to shake out the latecomers to the AI trade, to the tech trade. And so you can move up in a more reasonable fashion. We did get overvalued, unquestionably, but we're in good shape now. So I'd keep going, with the with the mid-cap tech. I think the AI trade is far from dead, but there's still some massive overvaluations. Most are in the private market, by the way, not in the public market.
Well, Joe, so speaking of tech, Alphabet has been the best story of the last few months in terms of this trade. Mm-hmm. It's defied a lot of expectations. It hits another record high today. It's up 11% alone since Gemini 3 launched last week. It was the only Mag 7 name positive last week. It's had a larger market cap than Microsoft for the first time in 7 years. That tells a lot. And if you need more, co-founder Larry Page, he's now the world's second richest person, passing Larry Ellison. So that's been a pretty good story, and that's one of the stocks that you own.
So I think what's happening is that we're looking at the AI trade and we're trying to understand who is going to deliver the quickest on the ROI. And I think in the case of Alphabet, they're giving you the evidence that they might just be that stock that does it for you. Gemini 3 seems to be something that's certainly changing the story dramatically. I think in addition to that, it's the TPU chips that are obviously being utilized in the AI infrastructure. So it's the confluence of the TPU chips, Gemini 3, Google Cloud, and then you go beyond that, you look at Android, you look at Waymo, and you look at YouTube, and you see this very diversified conglomerate that came into the year with significant questions surrounding an antitrust ruling and the fact that ChatGPT was going to cannibalize search. Now you've seen a reversal in that sentiment, a rebuilding of position. And to your point, when you look at the Mag 7, it really is only Nvidia and Alphabet that's outperforming the S&P so far year to date. So we're seeing kind of this narrowness in the Mag 7 and the opportunities.
Becoming more, as Citi says, idiosyncratic, right?
Yep.
Which they think continues into the new year, in that what was a lump everybody together trade, it moved as this monolith, is not doing that anymore. Because as you look at all these companies, yes, they have the circular deals, they're reliant on one another in some respects, but they're competing against each other too.
Yeah, so I think if I could finish my thought, two things are important as you move forward. What the ROI is going to be on the AI trade, and then I also think what we've learned over the last 3 weeks is that valuations in tech do matter. And I think the market is going to be a little more judicious, saying, okay, we don't want the extreme valuation companies where somewhere down the line the dream is that they'll grow into the multiple. We want the companies here and now that have more reasonable valuations.
What about the idea, though, too, that you talk about, you know, we're thinking about the companies that are going to be able to see the best and soonest return on their investment. You also don't, I think, want to see too many of these companies go too far out on the risk curve to try and get there. You look at Oracle, for example. Its CDS have spiked. You have people who are worried about the debt, the balance sheet. People see the debt as more risky. 5-year CDS spiking to the highest level since October of 22. It plays right into that. The Wall Street Journal today says the flood of AI bonds adds pressure to the markets. Markets are paying attention to that. Okay,
since $90 billion in new debt in 2 months.
Okay, since the start of September, Amazon, Alphabet, Meta, and Oracle have issued nearly $90 billion of investment-grade bonds, more than they had sold over the previous almost 4 years. Okay. Right? Almost previous 40 months.
Joe nailed it, where the market has drawn some lines. And so Meta and Oracle are in one bucket, and their stock prices are acting accordingly in recent weeks. Meta and Oracle are in the bucket where, oh, wow, they're not just coming out of pocket from free cash flow. They're going way further. They're signing deals. They're doing things off balance sheet. We've never really talked about that with technology giants before. That's always been a financial industry thing. Now, all of a sudden, it's really important to Meta to sign 4-year leases versus owning this CapEx themselves. But then there's this convoluted thing where they're signing a contract. They can't walk away. So even though it's a 4-year lease and it's off balance sheet, actually, it's a long-term liability because blank. Like those conversations, this sounds like stuff that you used to talk about when you thought about investment banks or insurance companies. So it's a new realm, and the market has decided, all right, these stocks are not going to get the same multiple that they used to. Google is the opposite. This is stock the 5th highest of all the S&P components above its 200-day moving average. I don't know if you know this. Google today is 56% above its 200-day moving average, which means if you're a new long or adding to a position, pulling a trigger into Google right now, you're buying one of the most extended names in the whole S&P 500. Think about how far that's come from, oh my God, Google is dead. They shipped a product this weekend, Nano Banana. It took off like almost nothing we've ever seen from Google in terms of the virality of the product, similar to what we saw with Sora about a month ago. Google is now shipping product that people are, in a very viral fashion, talking about, sharing images of, and people are absolutely blown away by the product itself. So it's a story of a reasonably cheap stock relative to the others with expectations of dire outcomes all of a sudden exciting people with product and separating itself from the companies that are doing bizarre financing schemes just to get CapEx built.
You know, I agree with a lot of what you said, but in terms of comparing Meta to Oracle, I think that's off base. Oracle is completely
share prices.
Yeah,
share prices.
You're right. Share prices.
That's all he's talking about.
Right. In terms of, though, the fundamentals of Meta and their ability to translate AI into revenues, I'd say that they're one of the most apt to do that the most quickly, and we see that virtually every day with them. I also think part of the issue is that technology investors, particularly mega cap investors, just are unfamiliar with off-balance sheet financing, unfamiliar with debt. We hear $90 billion debt raised, in a short period of time. When you take a look at the percentage of that, of their market cap, of their balance sheets, it's nothing. So it's a pimple. So basically, you've got an investing class that's not generally used to seeing financial enhancements. I'm not going to say engineering enhancement.
Well,
of balance sheets.
okay. So the Wall Street Journal today has another piece. And the headline is AI meets aggressive accounting at Meta's gigantic new data center. Right. Meta wants other people's money to pay for the data center. Those investors want to know Meta ultimately has their backs. But at the same time, Meta wants to keep its near pristine credit rating and doesn't want the extra assets and debt on its books.
Right. And let me just finish one thought. Let me finish one thought. So the idea of locking in 4-year commitments for data centers is that energy is increasingly tougher and tougher. So you need to lock it in so you can get the energy that you need, get that committed. Because if you don't have that, you're not going to get the energy committed. So it's actually very smart what they're doing.
All right,
Go ahead, Joe.
So you had $150 billion in technology issuance in 2021. You're blowing past that so far this year. You're going to exceed $200 billion. In the case of Meta, they did a $27 billion private debt deal. Now, understand right now, there's a lot of excitement in private markets for private infrastructure. Private capital wants in on the build out of data centers. There's also a sensitivity in the case of Meta to where a lot of people are saying, well, maybe historically you have not been the best spenders of capital. And I think there's that sensitivity that exists. I also think there's sensitivity going back to 1999 and the innovation that was built on debt. And the market is saying, in the case of Oracle and others, no, we do not want to see that. So I think you're going to continue to see a lot of tech issuance in 2026. I think the thing you want to watch out for, though, is a lot of private debt deals. There's talk that you might see one from Oracle. That would be somewhat troubling for the equity price of Oracle.
You own Oracle in your ETF.
Can't do anything about it.
Exactly. Would you buy it in your personally?
No momentum in that stock right now.
Would you buy it personally?
No. No, I've said that as we've gone all the way down.
No, the stock keeps going down.
And here's one other thing that I think everyone really needs to think about. If Gemini 3 is as credible, as strong, as effective as we believe it is, what does that mean for OpenAI? And all the deals and all the expectations that OpenAI is the one that's going to deliver AGI and going to deliver the best products, when if in fact maybe it's one of the existing publicly traded Mag 7s that might ultimately beat them to that race.
Well, I asked the question, if OpenAI is a publicly traded company right now,
it'd be a lot lower.
It's not at its high. It doesn't look like it does not look like Alphabet. We agree on that.
No, so there was talk. Right. It was maybe $1 trillion valuation. I don't see that anymore. $500 billion. We'll figure it out. But I do think you have to think about what the effect is on valuing that company if you're seeing the success that you're seeing with.
Would you buy a CoreWeave or a Nebius?
I would not buy CoreWeave. I never liked CoreWeave.
Micron's
Micron's a ripper today. Reiterated top pick at Morgan Stanley, the target to 338 from 325. Because they don't think that the sell-off recently has been warranted at all.
So Nvidia Blackwell needs high bandwidth memory, and that's what Micron actually is delivering. The supply-demand imbalance sets up well for Micron moving into 2026. And again, just like AMD, Micron was late to the story. So you're talking about let's build the positions at a much later calendar point than a lot of the other AI names did.
Broadcom's a ripper today, too, by the way. Its target goes to 535 from 400. And that's reiterated by at HSBC. You want to give me something on that? It's leading the S&P today. Now it's 9%. It was 7 earlier.
They're a Google partner on the TPU chips. And that's the reason why they're moving significantly higher. So as Alphabet moves higher, the derivative trade is going to be with Broadcom to a certain extent. Apple can also be brought into that combination. They have a little bit of a partnership with Gemini. And then there's two other names, Celestica and Lumentum. I wouldn't buy either of them, but they participate in that Alphabet AI infrastructure as well.
Where does Nvidia fit into this story right now?
I think the stock goes back above 200 and stays. I understand the reasons why it had the reaction that it did to the last earnings report. If they had never had an earnings report before that you had seen and you only saw that earnings report, you would say, oh my God, this stock must be up 40% in the after hours. The simple fact is, it's Michael Jordan in 1997 competing with his own highlight reel from 1996. You run out of superlatives at a certain point. Nvidia is in incredible shape. The only flies on the story are the same flies that there are around Oracle, but to a lesser extent. Are all these spending commitments being announced? Is there actually going to be follow through? That narrative could change on a dime. If OpenAI has a spate of great press, maybe they launch something new that people get excited about, maybe they recommit to whatever they're doing with Nvidia, everyone will forget. The stock will go up 15 points. If they get a headline out of Washington about H200 sales in China, again, whatever gray clouds are hanging over the stock, they go away in a second.
Well, there is a headline out there that the administration is floating the idea of selling.
So let's say it happens. I'm making the point that the stock is like one or two good news cycle days away from getting back above 200. We've seen it there before, very briefly. I think it will go, and I think the next time it goes, it's probably going to be one of those assets where people are like, I can't risk this thing running up to 250 without me, and the bulls take the upper hand again.
What do I do with some of these momentum-y, high beta names like Palantir down 19% month to date, AppLovin's down 14%, Vertiv's down 11.5%, Oklo is down 32%, Strategy obviously tied directly to the Bitcoin story, which has crashed in its own right. That's down 36% month to date. Joe.
Well, I mean, I've spoken about Strategy and how frustrated and disappointed I am that we maintain that position. There's nothing I can do about it. Not happy about it. In the case of Palantir, 200-day moving average is 139. Maybe that's your level of support. Some people are saying it looks like it bottomed on Friday. I'm not necessarily sure whether that's the case or not. But I think all of these names that you're highlighting, you have to think the market mood last week was, let's raise liquidity. And a lot of these names are where you could source the liquidity. Also, Nvidia being a classic example of that. And you just have to wait for the mood to kind of change where the market's not saying we want that liquidity. And at that point, I think you could see some stabilization in these names. I don't think we're there yet.
What about Robinhood's down 23 this month? You own that. Arista's down 23.
There's a lot of crypto in that Robinhood name.
It's tethered to where crypto ultimately is going to be going. Look, the entire list, I'm not excited about anyone right now taking a stand and saying I'm going to buy these names.
The frame of reference is important here for perspective. Those companies, Palantir, Robinhood, and some of the others you mentioned, were all, I think, very much overvalued. So the question is, are they going to get back to that level of being overvalued? I don't think so. And I sort of hope not, because then we'll run the cycle all over again with the major drawdown. But I think that they do increase in value over time when there's a reason for them to increase, and it's not just multiple expansion and because everybody wants to be in the same name. There's no way you can justify Palantir's valuation, even though it's a phenomenal company.
I think you don't lump them together is the first step. It's one thing to say, like, all right, look at these high flyers. They all went up 300-400% this year, and now they're all in 20% pullbacks, and want to tell a bigger story about risk off, and you can. But then the question of, like, what do you buy them? It's not a them.
No.
So Robinhood, $100 billion market cap, 46 times next year's earnings. Mm-hmm. Arguably, this is an earnings beat machine, and they'll probably do way better than what the street thinks. If you get a recovery in Bitcoin, the stock goes up 20 points, like overnight, and it has no fundamental change necessary. That's just how it trades. That's what happens. Palantir, they're going to keep beating earnings. I'm not saying it's 380 times earnings that makes it a buy, but they will continue to deliver upside surprises. I don't know. Like, those names to me feel different than Strategy, which is its own planet. I just don't see them as the same.
The challenge for a lot of these names is the attention of momentum players in the market. is pointed towards a sector that we're going to talk about later in the show, and that sector is the leading momentum sector right now on a 5-day, 30-day, and 45 basis. So when you have that, the names that you're talking about, you're not going to have the excitement that was represented previously to step in and stabilize.
Well,
them.
if there's a more scrutiny over speculative fervor in the market, then the names that we were talking about, represented in many respects by Bitcoin itself, if that deflates, then a lot of these other names, as you're talking about, are going to be directly tied to that.
And I don't believe that the sell-off in Bitcoin and cryptocurrencies is over. So I think that challenge is still in front of you.
You agree with that?
Yeah, there are other areas of the market that are now momentum, and if it continues, I agree with Joe. Like, that's where managers are going to look and say, all right, we're here. It's November 24th. I have X number of days to do whatever I'm going to do, assuming I'm going to do something into year end. Do I go with what's working now, or do I try to catch a stock that looks like a falling knife? And I do think people are going to look elsewhere. They'll look at energy, look at refineries, they'll look at a lot of areas in healthcare, and they'll look at financials, and they'll find better ideas than, I don't know, did we just see the last 20 points down in strategy, or is there another 20 points? That's just a harder trade.
So let's bring it full circle then to where we started this block 21 and a half minutes ago on the Pasquarello perspective. You want to call it that. Opens his aperture, right, wider to try and see more of the picture. Avoids a little bit of the noise near term, which is obviously shaking some people up. Deutsche Bank, 2026 target, their outlook, 8,000 for the S&P. What do we think about that? I mean, that's, if you're at, where are you at now in the S&P? 6,700, 8,000. Discretionary investor positioning as a source of potential market upside. We see equities continuing to benefit from the cross-asset inflows boom. It's a lot of the same reasons that Pasquarello remains bullish in the big picture. Is that a good view?
And the only way you will get there, given their weighting in the S&P, is if you still have the Mag 7 or Mag 6, whatever you want to pare it down to, cooperate. So they have to move up. That's just the numbers. That's just the math on it. But I think they will. And I think they will recover because I still think it's the best place to be. Now, there are other names, of course, and I like the Caterpillar, for example, and others that'll benefit from, again, the AI. So it's all going back to AI, and that's a risky strategy, but nonetheless, I think it's one that'll work.
If we do get to that target, and I'm not a big believer in price targets.
No, but it's a general
directionally.
So let's talk about that directionally. I don't think it comes with the same type of benign volatility that we've seen in the last several years, 23, 24. Right. Yes, in April we had that spike related to the tariffs, but we quickly smoothed that over. I can't see 26 not having more elevated volatility.
Profit margins growing.
Yep.
Talked to Warren Pies the other day. I know he's on the 3 o'clock show that you do a lot. Warren broke it down very simply. Try to find a historical market where profit margins were growing, earnings were growing, and all of a sudden PE multiples contracted. You can't. And this doesn't happen.
Right. And what's going to make those profit margins grow is what we're seeing with the immigration change, where all that low-cost labor, a lot of it's not around anymore. So that's going to force adoption of AI much quicker. And we're all seeing in every company we're involved in or that we work at. So I think that's a positive thing, but we've got to get inflation taken care of. And that's far from certain, particularly as you get a new Fed chair. Then that could drive inflation, and that will destroy the market for sure.
I thought we were going to get out of the conversation with actually not mentioning the Federal Reserve and Fed policy.
Almost. 12/23/56.
I waited till the last minute.
Almost. We almost did it.
We hit it at the end. We'll take a break. We have calls of the day coming up, and Josh Brown's best stocks in the market list. The spotlight shining bright on yet another name and group. We'll discuss ahead. Welcome back. Get to calls of the day in a moment, but we forgot to get to a move of yours, Weiss. That's my bad. In all that AI talk, we did not mention Alibaba today. Take a look at the stock because they had a good uptake on their new model, their new AI model. You bought the stock.
I did.
This has to be for the proverbial just for a trade. Well, yeah or no?
So my concerns with China have been, number one, that they would demand the delisting of the variable interest entities that really are in came in and you only own a profit stream, a revenue stream, you don't own any assets when you own those ADRs. That's never come up in any conversation, so I think I've got the all clear of it on that. Then, of course, the invasion of Taiwan, which is the biggest risk to that, but also a huge risk to the market and a huge risk to Taiwan semi. Putting that aside, I'm willing to assume the risk of China for what is going to be, and is right now, the leading company in cloud and AI, pure and simple.
Are you a longer-term player here or no?
I could be. I'm not buying with the intent to take 20% and then sell it. So
should have just bought it when your guy bought it himself.
I did buy it, and there I did trade it, and Dave's doubled in it, and I haven't. So
that's
I made
why he's
a modest
Dave and you're
gain.
you.
Exactly right. That's why he'll be in the Panthers owner box tonight.
That's right.
And I could be if I want to fly myself there to San Fran, but of course I'm not.
Well, he's totally invited.
Maybe he would have flown you there if you didn't get out of the trade.
Yeah.
No, I haven't heard his trade, trust me. Nobody's saying, well, Steve's not in, Dave, so I can't go with you.
Yeah.
But in any event, the stock's very reasonably priced, and I just think from here that it should be going straight up, China problems aside.
What do you think here?
I stopped
Former K-Web guy. I mean,
yeah, I stopped following Alibaba individually, but what Steve is explaining makes a lot of sense. The cloud over this stock and many others has been something to do with the structure for U.S. investors. That has nothing to do with the fundamentals of the business, which are obviously on fire. Whatever we think is good about AI in the U.S., I promise you, in China, they're every bit as aggressively going after the opportunity. And of course, this is going to be one of the names that wins.
Even more so, because they've got
it.
government funding for it.
No, I like the way Steve explained it. I also think there's a rotation that's going on where the skepticism of the last several years that you can invest in stocks in Asia and specifically in China will actually work for you. And you're beginning to see some allocations in that direction. Chinese stocks are up about 30% so far year to date, having a very strong year, very quietly.
I mean, not that quietly. If you would have listened, as we said.
Well, when I say quietly, I don't think we talk about it, so much.
Right. We used to have a segment for Chinese stocks every show in 2014.
Well, speaking of
we don't have that
idiosyncratic,
anymore.
Josh would buy the K-Web to express a view there.
Yeah.
I don't know if you're running out and buying the K-Web. You're looking for individual stories if you're going to do anything there.
Yeah.
I mean, I believe strongly I'll outperform with Alibaba than with K-Web because I'm concentrating on this. I'm
Should
not
have bought
buying
the
any of this.
DT Web.
K-Web won't work.
Exactly.
If Alibaba doesn't work, K-Web won't work. So
I got that.
Yeah, you got that?
Yeah, I got
You've
it.
been trapped in the DT Web for a long time.
Yes, I have.
All right, let's do
Gladly so.
Yes, yes. Anybody in the web is feeling good. Let's talk some calls of the day. Carvana upgraded to outperform at Wedbush, target to 400. Joe.
So this is a recent addition to the ETF, and understand whenever something goes in recently, I treat it as being guilty until you prove it innocent. You have to really be in the ETF for a significant amount of time for me to get excited. Carvana has to prove itself to me. Amazon Autos is out there. They did a deal with Ford. They did a deal with Hertz. They're gaining momentum. CarMax not looking so good. So I'm skeptical on this one.
What's the stock? Pull it out, guys, please.
Stock is up 63% year to date. It's having a really strong year.
Struggling recently, though, with that 200-day. To me, this
credit conditions.
looks like a coin toss. I'd almost rather buy it higher. Like with some confirmation that the rally is going to resume.
Yeah,
It's a little iffy.
And that's where it proves itself.
What about Cummins? Upgraded to a buy. Target to 628 from 522, and that's at Truist. At 628, it's at 486. Joe.
So that's one that we've owned since July of 2024. So I have strong affection for it. I really love this position. It's at an all-time high. The expectation is the commercial vehicle business is at trough. And that's remarkable. It shows the resiliency of this company because, on the other hand, it's been the power business and the data center build-out that's been the real growth story here since we've owned it in July of 24.
A Zoom reports after the bell today. Your final trade from Friday, right?
Yes, and I am clenching appropriately. So what are you laughing at? Doing my kegels over here. The great thing about the setup in Zoom is that the expectations are non-existent. So this is, we're a corporate customer of Zoom's. We use their enterprise products, including their AI note taker and their AI revenue accelerator. And it works great. We're not canceling. So we're fans of the product. Revenue is only expected to grow 3% year over year. So effectively flat. If they do anything better than that, I think the stock goes higher. It's a $1.21 billion quarterly run rate business without growth. But if they figure out that enterprise business and find growth there, that's the thing that's not in the stock at today's valuation. Enterprise momentum, customers, my firm and significantly larger, obviously, is the swing factor.
Can they do that, though?
Well, we're going to find out together, and it may not be this quarter, but I think utilizing their enterprise relationships with the millions of companies that pay them for video and related services, inserting that AI note-taking service in there, using that as a bridge to get more uptake on Revenue Accelerator, ZRA, Zoom Revenue Accelerator, like building that way through their existing customer base. All of a sudden, it may not be this quarter, one of these quarters they're going to say, enterprise is now clicking, it's growing faster than we originally thought, and people are going to re-rate this stock. I'm not saying it's a double, I'm just saying 79 probably too cheap.
You own it too.
We do. Bought it in January. We're
both
down.
Personally and in the ETF.
Yep.
By the way, look how many attempts on $85 a share. Eventually, and I hope it's today. Eventually, it's going to go.
Yeah, and that's we're long in January. In January, somewhere around $85. Josh really nails it. It has to be okay. Have they diversified the business away from video communications, and can that boost the growth back into double-digit territory?
All right, let's talk about Josh Brown's best stocks in the market. Healthcare just did something we said it hadn't done since '98.
Yeah.
100% of the XLV sector stocks advanced on Friday.
Yeah.
It's happened only 34 other days going back to the inception of it since '98.
You ever hear that term, probably from me, breadth thrust? Like, that's what that is, basically, but on a sector basis. It just tells you the level of institutional accumulation coming in. 21% of all the components in the XLV made a 52-week high on Friday. They are buying these names, and there's a reason. You get this really interesting grouping of sub-industries, and I'm going to talk about one of them right now. The life sciences, tools, and services names are set up beautifully, both this year and next year, from an earnings growth perspective. Most of these are recurring revenue businesses, which is Wall Street wants, and they're benefiting from an AI tailwind, but they're not wholly reliant on things like, I don't know, data centers, for example. So for growth investors that rode these traditional AI names up this year, now they want to switch. They want to buy cheaper stocks that also have that kind of recurring revenue profile. These are the names. Mettler Toledo, MTD, stock broke to a fresh 52-week high. We're showing you 50 and 200-day here to make the point that these are uptrends that have been going on for most of the year. And when you saw that Golden Cross happen earlier in the summer, that told you something interesting was brewing, and then you got that follow through here. So we like that name. Citigroup's target is 1,700. That would be 20% higher. Thermo Fisher is the biggest name in the group, $220 billion market cap. This one is not quite there yet, as you can see, not quite over the February high from earlier this year, but you have a Golden Cross, and you have all the ingredients for a potential breakout. I feel pretty confident it'll happen. Everybody's watching those March, April highs. When it gets through, there's no sellers. It's an entirely different story. The last one is Agilent. Agilent spun out of Hewlett-Packard 26 years ago. Ticker symbol A. Looks exactly like Mettler Toledo. It's a $42 billion market cap, right in the sweet spot of that next tier of large cap stock, riding the 50-day beautifully. Look at it. Every challenge on the 50-day, the buyers came in exactly where they were supposed to, almost like it was a script. Meanwhile, you've got a vacuum. If it breaks this level, 140, you have to go back to 2021. It was at 180. You really have 40 points with no natural resistance. So I'm watching this one for a breakout as well. Mettler Toledo's all the way through. I think Agilent is next, followed by Thermo Fisher. They're buying these names because they like the business, they like the outlook, they're not terribly expensive, and it's time for some new blood in people's portfolios. What do you think?
Well, that's Weiss.
You know,
he just gave you a couple of great trades.
He did, and I've been on the sidelines. Look, I think it'd still go. I mean, in an accommodative interest rate environment, healthcare is going to work, particularly biotech. And as I mentioned last week, until you see supply in IPOs or secondaries, there's nothing really to eat into that.
Look at that
demand.
move from beginning of fall to
Crazy.
now. Unbelievable, Joe. We've got a lot of exposure here.
Strongest momentum, 5, 30, 40-day time frame. I absolutely have a lot of exposure here today. 52-week highs, Eli Lilly, Biogen, Medtronic, McKesson. So money's coming in. IDEX Labs, which we own in Joe
IDEX
T.
is a great story.
Why don't you own Lilly? Why doesn't anybody own Lilly here?
We did own Lilly.
I know.
We were shaken out of Lilly.
It's just too expensive. I mean, you just don't pay that for a drug company. Even if you doubled the historical valuation, you're still way, way above where it should be. So I just can't do that. And there's more competition coming onto the market for their primary drug. I just can't see it.
I think Lilly is more important symbolically. This is the first healthcare company to reach $1 trillion market cap. Mm-hmm. The fact that that's possible, I think, is leading to the momentum in the rest of the sector. People are waking up and saying, wait a minute, there are growth companies in this group that are not priced like microchip companies. They're not priced like semis, and they have that potential to do what Lilly just did. You look at the names on my list that we've done segments on all year, Judge: Alnilam, Gilead, Amgen, AbbVie. They all look great.
I've got some breaking news. I want to get to Eamon Javers. It's regarding the White House, and I've seen these headlines move. Tell our viewers what they are, Eamon.
Yeah, Scott, President Trump says he's going to Beijing in April. This coming in a social media post just a couple of moments ago. The president giving a readout of his call with Xi Jinping of China earlier today. We saw both sides confirm the call this morning, but now President Trump is saying some of the details of what they discussed. He says they discussed soybeans and American farmers, and he also says President Xi invited me to visit Beijing in April, which I accepted, and I reciprocated, where he will be my guest for a state visit in the U.S. later in the year. So Xi Jinping coming to the United States in 2026, says the president. He says, we agreed that it is important that we communicate often, which I look forward to doing. He says the relationship between the United States and China is a solid one. No mention in this readout, Scott, of the issues in Ukraine or Taiwan, which the Chinese readout earlier today did refer to, said both areas had been discussed by the two leaders. So we'll see if the White House gives us any further indication this afternoon of what it was that they talked about in Ukraine, particularly in light of the weekend of diplomacy in Geneva, as the United States tries to hammer out an agreement that can be acceptable to both Ukraine and Russia to end that war there, guys.
Market's going to like any bit of positive news regarding the relationship between these two countries. I see a little bit of a move. Eamon, thank you. It's Eamon Javers down in D.C. about these headlines. You
Market's on the high, of course. The market likes it. Capital's flowing in.
2 2/3% for the NAS. A real point of contention, obviously, between these two countries. Export controls regarding chips, which were already one of the brightest spots in the market today. If you looked at Broadcom and Micron, for example, those stocks are ripping again. NASDAQ's good for 585 points, 2 2/3%. S&P's good for 1.5%. Dow's up quite nicely. So you have a nice move here to start the week. We're back after this. Steve Weiss, give me a final trade if you
Taiwan Semi. I mean, look, if this move continues, Taiwan Semi should recover its old highs. And if it doesn't, I think it's low risk downside.
All right. It's a nice move there. But, of course, the whole space is rallying today.
Yep.
Joe T.
XBI, Scott, just keeps going higher. Buy more. Buy high, sell higher. You do want to raise your stop here to 110. That's what I'm doing personally. This has been a really strong trade over the last 3 months. I think 125 is the next stop.
Nicely done. And Josh Brown.
It's going to be another iPhone Christmas, folks. It's been a while since we've had one. It's real. You're seeing Apple at a all-time high, or just pennies away from an all-time high. I think it's pretty clear that they're going to have a good quarter.
It's been getting rewarded for iPhone 17. Been getting rewarded maybe in some respects, too, for having a little more restraint on the spend relative to some of the others. So a lot of things seem to be working there. That does it for us. We got a nice day building. I'll see you for the final stretch.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It's Monday, November 24th. Hope you all had a great weekend. We had another positive day here in the markets. You can see the Dow was up 0.44%. NASDAQ up 2.69%. Big move for the NASDAQ. S&P 500 up 1.55%. And the Russell 2000 was up 1.81%. In this video, here's what we're going to do. We're going to cover We're going to look at the heat map in a few seconds, but we'll also take a look at a number of stocks they talked about on the halftime report earlier today. You just saw Josh Brown and some other guests. So, yeah, we're going to cover approximately 12 stocks that they talked about. You can see the list right there. We'll also take a look at the S&P 500 ETF, the SPY, the QQQ, the Dow, the Russell, the VIX, the FEZ, which is the Euro Stocks ETF. We'll also look at Apple, Tesla, Meta, Microsoft, Amazon. We will look at a number of sectors, guys. Many, many sectors. 20 sectors and different types of ETFs, including gold, Bitcoin. And then we've got, let's see here, 5 stocks that we're going to cover that have been requested by our members. So it's going to be a busy show, but I'm not going to spend too much time on each one. So we'll get through this pretty quickly. It won't take too long. Let's go ahead and get a quick summary of what occurred today here in the S&P 500. You can see that the majority of the stocks here in the large caps, especially like Google, was up 6.31 today. It closed, okay. Amazon up 2.53. Tesla was also up 6.75%. Meta up 3.16. Broadcom up 11.10%. Micron up 7.99. A lot of green. Palantir was up 4.78. What stocks did not do so well? Consumer defensives like Walmart, Costco, Procter & Gamble, Philip Morris. Home Depot, the home improvement companies, didn't do so well. TJX didn't do so good today. The telecom services like T-Mobile, Verizon, AT&T, AbbVie in the healthcare. But the majority of the healthcare stocks did well as well. Some of the utilities did okay, like CEG and VST. Berkshire was up 0.71%. Healthcare, like I said, pretty strong. And the industrials were mostly mixed, along with the real estate and utilities. Okay, so let's look at the groups, actually, because this is going to show us exactly how much each sector moved today. Communication services up the most, 3.63%. Technology up 2.48%. Basic materials up 1.84%. And consumer cyclical up 1.8%. Consumer defensives down the most, 1.16%. And this is the 1 week performance. Okay, so let's get into the stocks now. We won't take too long. Like I said, we are using the Ichimoku indicator. If you're new to this channel, let me just briefly give you an overview, just so you understand what we're talking about when you're looking at these charts. So the Ichimoku indicator is a Japanese indicator. Okay, it's been around since basically published in the late 1960s. And, once computers were able to allow for this indicator to be plotted much easier than doing it by hand, you can see that it can be very useful. And here's why. Number one, we can see the price. And what we want to do is look to see where that price is in relation to the cloud. If price is above the Ichimoku cloud, like you see right now with the S&P 500, that's bullish. But you also want to look at other elements too. Now the Ichimoku cloud here, let me just throw the weekly chart so you can see that one. It's a little bit easier to see. All right, so as you see right now, actually the price is actually under the 9 period. So that green line is the Tenkan-sen. It's the midpoint of the last 9 periods. We want price to be above. We're not above it right now. We actually dropped under last week. We had a down week for the SPY, and we still have not surpassed the Tenkan-sen, the green line. So yeah, it was up 1.46%, but and we did develop, so far we're developing what looks to be a bullish harami type pattern, which is positive, but we have to wait until the end of the week. Remember, this week, Thursday, obviously the market's going to be closed with Thanksgiving, and Friday's going to be a half day. So it's a really, really short week this week in the markets. And so now the other element of this indicator is the Kijun-sen. It takes the midpoint of the last 26 periods, and it plots it right under the candle. What about the cloud itself? Well, that's the Senkou span A, the light colored blue line. It's the midpoint of these two moving averages, projected 26 periods into the future. And then the purple line is the Senkou span B. That's the midpoint of the last 52 periods. In this case, if we're looking at a weekly chart, it's the last 52 weeks, the midpoint of the last 52 weeks, projected 26 periods into the future, instead of typically under the candle. So that's what makes this indicator very unique. We've got an outlook of what the future might look like. We've got also the Chigu span, which is a lagging line. It's basically today's closing price, okay? And you can see right there, it projects 26 periods into the past. So we want to see where that light white line is in relation to the candle 26 periods ago. If it's above it, like it is here, that's very bullish. We also want the green line to be above the red line and the Seiko span A to be above the Seiko span B, which is the case here. The only thing that's lacking in this candle, in this particular chart, that's not looking particularly bullish, is the fact that price currently on the weekly chart with the S&P 500 is under the Tenkan-sen still. But we still have the rest of this week for this thing to like continue to move back up and hopefully break back above the Tenkan-sen and continue this very, very long rally that we've had here in the S&P 500, going back all the way down here to where it broke the cloud back on May 2nd. Okay, that's when we got our first signal that this thing was really starting to turn around. I mean, we saw a little bullishness here while it was in the cloud, but generally you don't want to be jumping in until things start to clear above the cloud. Okay, next we got the QQQ, also similar, right? On the weekly chart, it's under the Tenkan-sen. On the daily chart, it's under the Kijun-sen. We had a bullish day, up 2.56%. You can see that the Chikou span got back above the candle. It was under for a couple of days here, all right? But it got back above, which is positive. The cloud itself also is still bearish here on the daily chart with the QQQ. There's a lot of damage done in this pullback. And so the Seiko span A actually crossed under the Seiko span B. So that's negative. So we're not out of the woods quite yet, as far as I'm concerned, but it's looking more bullish because obviously we had that spinning top on Friday, and things were looking really bullish. The fact that it held within the cloud itself, I said, was a very bullish sign. And you know, boom, it just popped right back above. The Dow Jones on the daily chart, okay, also, you know, still under the moving averages. It's above the cloud. Chikou span is above price, but in the cloud itself is just kind of flat right now. It's nothing major happening here. This is the weekly chart, okay, also, you know, under the Tenkan-sen. Russell 2000, okay, came down, almost touched the Kijun-sen in the 26 period here on the weekly chart, and bounced, and it was up 1.81%. It's still also under the 9-period midpoint on the weekly. Here's the daily chart inside the cloud, stalling at the Kijun-sen. So, you know, and then it's got a much more bearish cloud here because it's been, you know, it had the twist. We saw that signal back on, let's see here. Well, actually, it projects 26 periods into the future, so it's hard for me to like determine the exact date that happened. But basically, we'd have to go back 26 periods. So I'd have to go. Okay, let's do that real quick. Actually, here we go. We would have seen that plot twist right around here, on the date there was November 14th. Okay, so on November 14th, the cloud turned bullish. All right. Anyway. We are still in a downtrend here with the Russell 2000. Okay, we haven't cleared above this trend line either, so something to consider. And the VIX dropped back under the cloud, which is a great sign, down 12.12%. You know, the VIX is the volatility index. We want this to be dropping. We don't want to see this spiking. When it does spike, like it did back in April, we saw what happened to the stock market in April. It dropped significantly. So here's the FEZ, which is the Eurostoxx 50 ETF, down 0.13%. Has not done as well as the American index ETFs here quite yet, but it is stalling. I did mention on Friday that we had a bullish Harami pattern. We stuck inside the cloud, but today down 0.13%. Nothing major happening. Another reversal candle. So we'll see what happens tomorrow with FEZ. Let's get into the stocks they talked about on the show. And here we have, we'll start off with the strongest ones. Now, what I did was I reviewed all the stocks actually before making this video here. And I can tell you that Caterpillar and Broadcom are the two stocks that I would consider. From a technical perspective, using the Ichimoku indicator, they look strong on both the weekly time frame, as you can see here with Caterpillar, and with Broadcom on the weekly chart. Okay, both of those look pretty bullish. On the daily chart, here's Broadcom. You can see the cloud itself turned bullish recently. Price had a big jump, 11.10%. The Chikou span went straight up, and the only thing that's kind of lacking still is the Tenkan-sen hasn't quite crossed above, but it's moving up, and I think it's going to soon. You can see also the directional movement index here that represents the direction. The green line, if that's above and moving up, and the red line is moving down, that's positive. And the ADX, which is the white line, the ADX9, that white line that you see right there, that's momentum. If that's increasing, moving up, that's a very bullish sign as well. So I like Broadcom as well. Not sure I'm crazy about the sector quite yet. I'm still holding off to see if we'll see some more strength in the technology sector. I mean, one day doesn't change the whole view for me. Zoom Communications, this was, as you can see here on the weekly chart, we're stalling right around the 200-day moving average, but we're still under the Kijun-sen, the 26 period on the weekly, and on the daily chart, we're still inside the cloud. So nothing special here, in my opinion. I would not be jumping into this one at this point. All right, TSM, Taiwan Semiconductors, also inside the cloud. One of the rules of Ichimoku, you should not be adding positions if price is inside the cloud or under the cloud or under the moving averages. Okay, so as you can see, Chico Span is under price. I'd stay out of that one. Palantir, same thing. Yeah, we had a big day today, 4.78%. But the damage has been made here with a break under the lows, okay, these lows here. And so, you know, we haven't even broken back above that level. So I'd stay out of this one, obviously. Micron, okay, this one's pulled back. We had the bullish hammer on Friday. It stalled right at the moving averages. Now tomorrow, you never know. Price could potentially pull back again. We'll have to see if we get some more strength into this. What about MTUM? MTUM is also under the cloud, under the moving averages still. Yes, it was up 1.88%. Could this be the bounce? Certainly, but you know we're still in a downward trend. You can see that downward channel that we're in. Okay. MSTR up 5.01%. Now, at first glance, you might think these stocks are fantastic. I'm going to jump into these now. Yeah, but you're taking a big chance because, as you can see, they can embed and stay in a declined state for quite a while. Look at this downward channel that we're stuck in here. Okay, until you get some signals of hope, where minimum would have to break, in my opinion, above a trend line to even think about it, really. And at this point, if all I see is a continuation to the bottom here, it's still dropping. The ADX is a good signal. It's telling us that the momentum is still increasing, but instead of increasing to the upside, it's increasing to the downside because the red line, okay, right there is above the green line. And that's when you're in bearish territory. So 200-day, which is that dotted yellow line, that's also declining. So, you know, it could continue dropping some more. You never know. I certainly wouldn't be jumping here. KWeb. Okay, so this one also, China Internet ETF. This is also a broken pattern. And when I say broken, I'm saying we've got a lower high here from the prior one. We broke through this low. We haven't even gotten back above this area yet. We're under the Tenkan-sen, we're under the Kijun-sen, we're under the cloud. So yeah, don't get too excited about this either. And here's a weekly chart if you want to see what the weekly looks like. It's still in bearish territory under the two moving averages. All right, let's keep going. We got Robinhood on the weekly chart. Okay, it did show us, well, it looks like it might potentially be creating a bullish harami here. Okay, but again, this candle hasn't formed completely yet. We won't know what this candle looks like on the weekly chart until Friday. So you can't really make an assessment at this particular time, but it's looking, you know, bullish because it was up 7.15%. On the daily chart, we're still under the cloud. We're in a decline. And again, as I've said, we have established a downtrend in Robinhood because we've got the lower high and we broke through that low right there. Okay, that prior low. CVNA, Carvana is also in a downtrend. Okay, up 6.78%. You can see that right there. No good, no good. Alibaba is also similar situation, downward trend. So now you can see why I'm not too excited and why none of these stocks got a blue flag like Caterpillar and Broadcom. I like to buy stocks that are basically strengthening after a pullback, or after they've broken above the cloud itself. You can start thinking about adding, that was the first break right there. It was a short-lived little breakout. But it, hypothetically, to say that you had used a stop right under that candle right there, you would have been okay, right? So if, let's say, assume hypothetically you bought there, you placed a stop under that low right there, gave it a little space to run. You can see the big move that it made right there. And then once it got into the Tenkan, all bets off, right? It just started dropping. The Tenkan crossed under the Kijun, price continued to move to the downside. So, I mean, you know, the market moves in waves. And right now, we're not in a positive wave here with BABA. All right, let's go to the next. It's as simple as that, guys. You don't have to make technical analysis very difficult. It shouldn't be. You know, you shouldn't be overthinking and you shouldn't be overanalyzing. And certainly, you should take a look at the fundamentals as well. We do want to invest mostly in companies that are profitable, that have, you know, positive sales growth, and but for me personally, the technicals are extremely important because it also basically what it does is it shares this, you know, like what's going on, like the participation of the buyers. You know, are there more buyers than sellers at that particular moment that are going to help push the price further up? I don't want to get stuck holding a stock for too long. It happens, but that's not my goal, right? So here's Apple, obviously in a nice strong uptrend, up 1.63%. They talked about how this company might be doing well because, you know, they haven't really made a huge investments, if you think about it, in AI. And the cost of, you know, now that I'm starting to think about it a little bit more, AI costs are declining so much, and the huge investments that, you know, the big companies that have made, right, they may not pay off ultimately because the costs are coming down so significantly. Everything is going to be so, you know, I'm not sure they're going to be able to recoup all the money that they've invested. So Apple might just be able to benefit in this scenario. But at the same time, I'm concerned about Apple's, you know, ties specifically with China because they are completely reliant on a foreign country, you know. So all the manufacturing, pretty much the majority of it is made there. If there's any issues between our two countries and tariffs spike again, or some other type of event where, you know, there's a decoupling of the United States with China, you know, this company is going to get hit hard, the hardest out of all the technology companies. Tesla will get hit too, but not as bad. So here's Tesla down up 6.82%. It is still inside the cloud. Okay, so yeah, it was up 6.82%, but I'm not too excited about this one yet either. Meta, we broke above the Tenkan, so there's the first signal right there that, okay, something positive is happening here, but we're still under the 200, we're still under the Kijun. We've got a lot of resistance levels. You know, this might be more of a short-term play potentially, where it moves up, and this would be the target area, which would still be, you know, about 8.5% away from where we currently are. You know, this is where you would expect to find resistance, up in these levels. So, and the momentum to the downside is also coming out. See how the ADX was moving up steadily here, right? And then once we start seeing the momentum drop while the red line is above the green line, that's actually positive signal. Okay, that's a positive signal. As you can see, it's declining some more right there. And the green line is moving up and the red line is dropping, and they're going to intersect, and then we might see a move back up. But I don't know how, you know, how long that will last. I mean, so that's, or how, yeah, exactly. Basically, will it break above these resistance levels and surpass the cloud? That I can't tell you. Right now, I would still stay out of this stock. There's other sectors and other, you know, stocks that are looking significantly stronger right now, in my opinion. Microsoft has come down to a support level. Okay, up 0.40%. It's touching the 200-day. Now, this also has developed a bullish double candle pattern right here. The tweezer bottom, they call it. It's when the wicks at the bottom, the lows of those two candles are around the same level. And the fact that there's a confluence of the 200-day moving average, there's a higher probability tomorrow that price will move up. But again, it's under the cloud, so under my rules, I typically wouldn't add a position here on this. Here's the weekly chart, still under the moving averages too. Amazon also under the moving averages, and on the daily chart, it is popping above the cloud. There's mixed signals here with Amazon. I'd stay out of that one too. Okay, next, we're going to go into the sectors very quickly here. The strongest sectors, XBI, biotech, which I mentioned also last week. If you remember, if you saw the video that I made on Friday, you know, I talked about how this was looking the strongest. It broke through those little levels on Friday. And then here's the continuation, up 2.51%. Looks great on the daily, looks great on the weekly. XLV looks good. On the weekly chart, we have a bullish cloud that's formed. Yeah, it looks, I mean, the candle's still small but on the weekly chart, but it's just the beginning of the week. Here's a daily chart. Still looking good for healthcare. Okay. The rest, GDX. Now, these are the two that have both a bullishness on the weekly and the daily. Everything else might be, you're not going to have perfect technicals, and so they don't qualify for the blue flag, basically. GDXJ, gold miners, yeah, it was up 6.25%, still inside the cloud. I didn't hold off on this one. Oil K is under the cloud, no. Copper is inside the copper. Miners ETF, COPX is inside the cloud, no on that one. XLC is still under the cloud, so no on that. That's communication services, ETF. IBIT, Bitcoin, up 5.42%. This could be a bottom, but I wouldn't bet on it 100%. It's still in a decline. It's still in a downward channel. SMH is also still, as you can see here, in a downward channel, okay? So actually, yeah, it's in a decline. It's in a decline. We don't have a lower, I don't know if we can call this a lower high. I guess we could. Yeah, there's a low there. There's a high right there. So we did break through that level too. So right now it popped back above the cloud. This might recover. It's up 3.98%. The semiconductor stocks did pretty well today. We'll see what happens there. Here's a weekly chart so you can see what that looks like. We're still, like I said, under the Tenkan-sen too, the 9 period. Gold, okay, on the weekly chart, recovering, staying above the Tenkan-sen all these weeks. So gold has never actually crossed and closed under. Now it's been locking in and closing above that 9 period, the midpoint, which is great. And so it shows more strength. But on the daily chart, we are still, you know, the good thing is we haven't established a lower low here yet. So we do have a lower high here from the prior one, but we never did take out this low. All right. In fact, you might even say this is a double bottom pattern right there. And now if we can get above this level here, I think we've got some potential for another, you know, retesting of these highs here. And then we're off to the races once again. The directional movement index is starting to look more and more bullish. You can see how the green line is moving upwards. Red line is moving down. ADX, where it was moving down, starting to flatten out. All we need to see now is this thing starting to like move back up again, and gold could potentially. I added one gold position today in the portfolio, and mostly healthcare stocks in the members only post. So real quick, guys, if you want to get access to the exclusive content that I create, become a member. One thing you can do, all you need to do is hit the join button. It's next to the subscribe button. So you click on join, you'll see the 3 different membership tiers. Blue Cloud Supporter. Under Blue Cloud Supporter, thank you for supporting the channel. You can request a stock or ETF be analyzed once a month. Blue Cloud Trader. Okay, under this membership, this is where you get access to the exclusive member-only videos. All right, and you can request 2 stocks or ETFs be analyzed once a month. Blue Cloud Legend. All right, the next level up. You can request 3 stocks or ETFs be analyzed per month, and you get access to some of my day trading videos that I've recorded, plus daily trade updates. This is the key thing for the Legend level membership. What I do is I share all my trades, and I post them. After you become a member, next to the posts, what will happen is there'll be a new tab. It will say membership, and that's where you'll be able to access those posts. Okay. And then if you want to find the videos, the membership videos, you just go down below here, member only videos. Scroll down on my YouTube channel, you'll find them right there. I did one 2 days ago. It's an hour and 11-minute video. Okay, and what else? Oh yeah, don't forget also, folks, to if you haven't subscribed, please consider subscribing. We're at 25,700. We're trying to reach 26,000 subscribers. I'd really appreciate it. And hit the notification bell if you want to make sure that to get these videos on time. Okay, let's get back. So XHB, how's that looking? Home builders, no on this one. It's still, you can see how the price has been finding resistance many times at the 26 period right there with the shooting star, and it price dropped. Right here stalled. Right here we got ourselves a red spinning top. So I'd stay out of XHB. XLRE is real estate. That also looks bearish. XLY is under the cloud. No. XLU, utilities inside the cloud. No on that one. XLP, consumer staples. No on this one. Look at this. This has actually dropped 1.16% today. What about XLK, technology? Okay, so we can see that on Thursday here, and on Friday we were under the cloud, but on Friday we got that bullish spinning top. Price popped back into the cloud. Will it be able to break through these levels of resistance? First of all, we got the 9 period, we got the cloud itself, and the 26 period. The Chiku span is still under the candle 26 periods ago, so it's got a lot of work to do still. Industrial, same situation. It's under the cloud though. This one's worse. XLI, and then XLF financials is also under the cloud, but finding support multiple days or above the 200 day. It's been intermingling in this area. Energy is above the cloud. We got a bullish hammer type candle. I don't know if that's going to turn into anything, but overall the daily chart, we still have a bullish cloud here. We're still above the cloud itself. On the weekly chart, we're also above the cloud and above the moving averages. So energy has potential, but it was down 0.28% today. Silver needs to break above the Tengen-sen. It's up 2.94%. Otherwise, I like what I'm seeing with silver. On the weekly chart, you can see that it's building what's called a pennant type pattern on the weekly. Okay, so it's getting squeezed in week after week in this little range. Okay, and so the question is, which way will it go? Will it break above that trend line, or will it break under this trend line? Okay, I don't know. We got to wait. Right now, it's looking more bullish. Obviously, finding support right there. That's the weekly, and this is the daily. Up 2.94. You know, the directional movement index is ADX is just kind of flat or slightly moving down, so that's not really giving us any info. XLB is under the cloud, under the 200, under the moving averages. No on the materials right now. And then finally, let's take a look at the members' requests here. Abbott Laboratories, under the cloud currently on the daily chart. Let's look at this on the weekly first. Yeah, it's we have a bullish future cloud, and price seems to be on the weekly chart just kind of stuck in this range. So, you know, it depends on what time frame also you want to trade this on. You know, I like to look at both time frames when I'm making my decisions. You know, this is more of a hold position probably because it is stuck in this range. On the daily chart, you know, we're under the cloud though. ALAB, let's look at the weekly chart on this one. This one looks more bearish because it is now sort of still continuing to drop. It's under this trend line. And the cloud is still below here for support. Now, how far are we from the cloud itself? We're about 57.65% away on the weekly chart. On the daily chart, we're still in a continued downtrend here. So we've got, oh, yeah, I forgot to throw my notes on there. This was the last time I held a position here. We're still in the downtrend. So we've got ourselves a downward channel. Okay, do you see that? And where's it going to find support? Most likely the 200. See that dotted yellow line right there? It's about 18.7% away. It's a very volatile stock. So that's where you might find some support. It's also finding support just at these levels here. You can see that very closely how price has been getting, see that right there, that yellow line I just drew? So it seems to be bouncing off that level. Let's find out what that level is. I'm curious. It's around the 130, yeah, 137.39 level. And see how we had a hammer there and then it bounced, but then it stalled once again at the Tengen-sen. So I would not be adding positions here, okay, or averaging into it at all. I would stay out of this, you know, stock. But if you're holding it, you have to determine whether you want to keep holding this at this point. It looks like it's recovering a little bit. As of today, it was up 4.2%, for example. NBIS is also under the cloud right now. It's under the moving averages. We've got a bearish future cloud here on this one, and Nebius Group on the weekly chart showing some strength here. It looks more bullish. We're above the cloud. The price broke back above the Kijun-sen, so there's a sign of, you know, that this thing could potentially continue moving up. It was actually up 10.38% today. That's a big move, but it's got a high beta, 5.77. You know, when I traded this a while back, I said high beta moves quite a bit. Be cautious with this stock. And the last time I held a position in this one was back here on September 22nd. It was in my 20 stock watch list. I closed out of that position, very quickly for a 12.8% profit. It continued to move up. And then it, as you can see right there, we developed a lower high right there. Okay. And then it also broke through that low. So it needs to get back above that level. It needs to get back above, obviously, these resistance levels. CCJ on the weekly chart, bullish harami. Cameco Corporation, Industrial Metals and Minerals. So it looks like 4 weeks now in a row under the Tenkan-sen on the weekly chart. I'm not a big fan of what I'm seeing here with the profit margins, but maybe their profit margins are improving potentially. But here's the daily chart. It's currently under the cloud. We get a bearish future cloud here. It showed some strength today, up 4.91%. Like personally, hypothetically, if I had a position in this, I'd be looking at the low here. And if it gets under that, I'd probably start considering getting out of this one maybe. But then again, it looks pretty bullish here on the weekly chart too. So you've got potential for this thing to recover, as it is still above the cloud itself. Okay. You got ANET, this is the next one, Arista Networks. This one closed my position here back on October 30th. Let's go to the daily chart. So I got in around this area here, moved up to that level of 162.68, dropped, found support at the cloud, held this position, came back to that same level, created a reversal candle, and I closed my position, and it continued to drop. So this one here has dropped approximately 27.2% since that level. So this is why technicals can be very useful, guys. It can really keep you out of a long, extended drop. Now today, the good news is it's starting to rebound a little bit here today, up 4.04%. Some of the momentum has come out of this decline. You see how the ADX was moving up and now it's starting to decline a little bit? That's a good sign. So the question is, will it continue? And will it break through that Tenkan-sen and continue to the upside? I don't know the answer to that one. We'll have to wait and see. The weekly chart looks pretty bullish here with a bullish harami type pattern that's starting to form. We'll see if it can continue by, into Friday. And that's going to do it for this video, guys. Thank you for watching. I appreciate all of you. Hope you have a great rest of your day or evening, and I'll catch you all in the next video.